Welcome to Trading Lounge and the Gold Report for Wednesday, October 6th. This is gold on the monthly chart here. I don't have it labelled. There we go. So, just what I wanted to point out here, we pointed out before, is that the stochastics is, the indicators are sort of trending down faster than the price is going down. So it's kind of loading up, if you will, to a point. The little line across here is the 38.2% retracement level taken from that wave 2 low here. We can clearly see that we've got a nice third wave here, nice strong third wave. We can see that this pattern here is corrective, so it's got overlapping wave structures, so it's corrective. It's a little bit complicated. We're looking at it as a triangle, doing our best to work through that. So all in all, it should really stay above the what I call the medium level here. One of the other points here is, I suppose we should start looking at a bearish count as well. How could it come lower? How do we go about doing that? So I've started to have a bit of a look at those possibilities, because it's always opinions in life get us into trouble. They can be helpful, of course, as well. But in the markets, the market is the boss, and we're just sheep, and we need to play our role in that and just graze along and enjoy the process, so to speak, because there's nothing you can do about it. I mean, you've got control over everything, you're the boss, but you're not the big boss in all of this. The other important thing here too is the 18 level here. So let me just go to this for a moment. Just want to point out the importance of that. This is a 2-day chart here, so the stochastics is also loading up for a buy here as well. But go to any time frame and get what you want really with indicators. So just what I want to point out here, if you can just see this for a moment, because with the trading levels, 1,000 is a major level, 2,000 is a major level, halfway between 1,000 and 2,000 is the 1,500, which is a medium level, and also 1,650 is a medium level if we take 13 as a Fibonacci number as a major level, which we do in stocks, not so much in indices, but you can see here it's played out well enough. So and here it's gaining support here. This low here is not, this is a CFD product here with IG Markets data in it, and the software is Pro Real Time, a French company, so it's just an easy way to access cheap data and be able to use this particular program for videos. But with market makers, you just can't trust the price, because basically they need to make a market as well for their users. So on COMEX futures and COMEX spot, this low was not the low, this is still the low here. So yeah, but it's market makers for you. Just remember, with market makers, your loss is their gain, so you're probably better off, I much prefer trading futures than CFDs. That's another conversation. So we've been viewing it as a triangle pattern. As I mentioned, we've got overlapping, these highs and lows are overlapping each other. So it's a corrective pattern that we're in. Is the triangle the right pattern? It's looking okay. So we just got to keep sort of working through it a little bit. Like I said, I will work on a bearish count. But for the time being, we'll just look at this here. Now the 18 here, as you can see, carries a little bit of weight, and we're kind of under that level at the moment. Once we get that as support, maybe we'll get some version of support up here like we've got here or here, but never really sustained and made new highs at those points, so it needs to retest and then make new highs, and that was the first high above the level, so it never breached that again, and that's what we would need to see for this 18 to become the support. But all of that said, we're just looking for 5 waves up for wave C here, so it will kind of look like we've got support up here, but we'll just have to be a little bit more patient and allow it to unfold a little bit further to see if we get this scenario in here for this as well. So from here, we'll just go to the 2-hour chart. And we're looking at, last time we spoke, we were looking at, well, yesterday, we were looking at 1, 2, and 3, and 4. And this morning, that this move up through here is only in 3 waves. So we really need to look at it as a B wave. But I'm a little bit concerned with that as well. I can count 5 waves here for wave 5 of 1. And then an A wave and a B wave and a C wave here. We've got 5 waves here. But a bit concerned because you don't normally get an expanded flat correction. Well, it's kind of an expanded flat correction, the B wave taking the top out here. I could call it a flat correction, I guess, as well, but it's a little bit unusual for wave 2. So I'm kind of wondering, because I'm just missing one little wave up here for that. So I'm just wondering if I've made a mistake here for this, in that we have this as the A wave, a B wave and a C wave back down to the 50-60% retracement level. We certainly won't be reacting to the market while we're above this 61.8% mark here, but there's a possibility that we could come down and check it at that point. So an A wave, a B wave and a C wave, and then a move up from that point. If you're looking at going long, then going long above that high there would be, because that's an impulse, appears to be an impulse wave. We'll check on that in a moment. But yeah, I just wanted to talk to us about this particular pattern in here. But as it stands, 1, 2, 3, 4, 5 for 1 and ABC for 2 here. Worst comes to worst, we'll need to look at copy this here for this and this here for that as a as the pullback. That said, in one way or another, because I've got an impulse wave here, even if this is wave 1 top here and this is wave 4 here with an A and a B and a C for an expanded flat here, because what's happened here from that high, with that high taking out that high and dropping back here, is really the same as this doing here, because we're getting reoccurring patterns here. But also too, we've come through this trend line through here. So as I mentioned a few times, is that it's a bit like the classic trading levels pattern. So this side will be resistance for a while, and then it'll push up, and then it will come back and check it and find it as support, So that's what we're sort of looking at here. It's migrating from one side to the other. And the 50 here, between the 1700 and the 1800, the 750 is the halfway mark here, and it's gaining nice support on that level. So in lots of ways, it's looking positive in that. Just a little bit unsure about that structure within that space. So we're just going to go to the 100 ticks and check on that, bring in a bit more data. So, yep. So we're working from the bottom of this B wave here, and we've been counting up. So we're looking up at 1 and 2 here, and 3 here, and 4 here. And then we could look at this as 1 and 2 here, and 3 here, and A, B, C for 4 here, and up for 5 here. So it kind of fits, but this is a bit impulsive. This move here is in 3 waves. So we really got to look at it as an A wave, a B wave up here, and then a C wave coming down with 1 and 2 here, and then 1, 2, 3, 4, 5 here for the 3rd wave, 4th wave, and 5th wave here. So that would make C of 2 at that point. Now this little move here, it looks quite nice actually as wave 1 and 2 and 3 and 4 and 5 here as 1 and 2. So coming back into the box here would be fine. So long trades can go from that point. Still need that. It can go over there somewhere. So that's it really. I mean, the only other thing that I can see if I've made a mistake here is that wave 2 would be over here for that, and this would be the A wave here, the B wave here, but it doesn't look like a B wave. It's in 5 waves, so we should get a correction and then a move up from that point. We haven't found support in group 2 yet, so from 1700 we've got the Fibonacci numbers running 1, 2, 3, 5 and 8. So 8 here is all part of group 2, so 65, 72 and 80, and the market hasn't really gotten in there yet, you know, so that's the resistance that, you know, we touched on it here, and you know, we sort of had another shot at it here. We're not, you know, it's been trying to get through that glass ceiling, so to speak. You know, we know that 18 is where the real pressure is in the market, because we can see that it's a balance line all the way through. So we need it as support, but will we get it? It's another question. So anyway, wave 1 here and 2 here in blue, then we've got to go up for 3, 4 and 5 up through here somewhere. So we'd expect this wave 3 to be at least the same length as wave 1. Just put these over here on that. So the length of wave 1 is here, but quite often wave 3 is this wave 3 would be another 60% on top of the length of wave 1, which would be nice. But I know there's a lot of pressure here, so we won't be you know, we won't be gunning for that, but we'll be looking for probably don't even need that there for the time being, but because we know there's going to be resistance all through here. The resistance is, and the messy wave structures are going to be in this space. So group 1 above 18 and group 2 below. So it's going to require a lot of effort to get up there through all of that, that's for sure. So it's going to be a slog, and yeah, we just got to sort of hang in there at this point with it. That's that really. The bearish count that I was working on, maybe just have a quick look at it. It's on the daily chart. It's a bit of a long shot, but I just try to find out. I just always try to understand both sides of the coin, you know. So wave 3 up here, an A wave here, and then the B wave is over here. So an A wave here, an ABC for the B wave here, and a C wave up for the B wave, then down for 1, and ABC back for 2 here, and then down for 3 at this point, and 4 and 5. So that would be a bearish count at this stage, but we don't have any evidence of that yet. So we'd still need even this here as, I mean, this here is a wave 1 here is a bit dodgy because wave 4 here basically overlaps wave 1 up at this point. So that's the problem with that. But as an A wave, a B wave, and a C wave to wave 2 here, that's possible. So we'll just be mindful of these things, you know, because they help in understanding both sides, helps you weigh up, should you take profit, should you lock up, should you do this, should you do that, you know, because you need to take sort of an educated guess to manage your exposure in the markets. Once again, here you can see the importance of the 18 here. So coming back up and checking this is going to be a bit of a slog in that review. So where would this be validated? Well, of course, if it took the low out here, that would be one way of doing it. The other way is that we're looking for 5 waves up through here. If we don't get 5 waves and we only get 3 waves and it starts to come down a bit too much, you know, to overlap, then we'll know that, well, crikey, we might be in this thing here after all, you know, and then we can act at the right time, do the right thing at the right time. So understanding both sides. I don't know if this is the right count for the bearish side or not, but it's a start, and hopefully we can get some feedback on these things, on all of these matters, and anybody that's got any other counts, either email them to me or stick them on social media or something, and we can discuss them further. Alrighty, let's have a quick look at silver. So with silver, unless it gets support on $23, it's still looking a little bit sad. I mean, the main point here is we've got wave 4 up here, and I'm looking down for wave 5. It's possible to have wave 5 in here. It's a reasonable count. It's a little bit sort of dodgy. I need to go back in and check this, and this one here I'd have to put it, I can't put it here. I had it as an A wave, a B wave, and a C wave in there, but I think it's more like a triangle, an A, B, C, D, and E here, and then the straight move down at this point. Not quite sure if we should count that from the low, which is the actual low, and look at this as 1 and 2 here, or start it from here because of 1 and 2 and 3 in here and 4 and 5, so not finishing off very well there. We can stay on the long side as long as we stay above 2.2, the 50-60% retracement level here. So we could even call that, we could even call this 1, 2, 3, 4, 5 here as wave 1 here. So we can put this, copy that, we can put that there, and then this would be coming back for wave 2 over here if that was going to be the case. But we'll just see how this plays out a little bit. I'm thinking this could be wave 4 coming in here, because this move here, I suppose we could look at it in 5 waves, maybe. That looks impulsive, looks corrective. Still, anyway, the only way I can prove that we're going to be going higher is getting support on the $23 mark. Otherwise, it's still possible for this to have another low in this area here, because a lot of this is just not tidy enough to work on. So, you know, we won't be going long unless we get that 23 as the support at that point. So we're still building a case here. There's a 50-50 chance for this market to go either way at this stage. So we're not that sort of concerned about it. It is good that it has moved out. It hasn't really from that point, from there to there, it has moved out from that point. But I guess in the bigger picture, just starting to struggle through there at the moment. That might be partly the reason. I mean, that's what gold's just gone through to now as well. You know, crossing the line over here for that. So I mean, it is a positive. We'll just give it a bit of time. You know, I could get 5 waves out of this, but it's just a little bit shaky. So I'd rather give it more time just to see if we've got a corrective pattern here and we're going to go lower at this point. So yeah, just still have to leave it, unfortunately. We had a look at the bigger picture yesterday, so I don't need to look at that today. Yeah, so I'll leave it at that. Alrighty, thanks for tuning in. Cheers.